Hi, welcome to the Lonely Financial Podcast. Today we're going to talk about what is the best way to finance your home. Do you realize that if you have a mortgage, you could be leaving tens of thousands of dollars in the bank to the bank's profits that should be going to you to buy cornflakes for your kids tomorrow morning on the breakfast table, and yet that money is leaking right out into the banks. And there's a reason that the banks are never going to show you this kind of concept. And we're going to talk about a product that allows you to pay your home off in, I would say, generally half the time of what normally you would pay in a 25 or 30-year mortgage without any extra payments, without any extra money. And as a matter of fact, we have experience with clients now where we have seen 25-year mortgages paid off in 11 years. Our record is a client who we structured this properly. They had a 17-year mortgage, so 17 years left on their existing mortgage, and they paid it off in 3.5 years without any additional income. So how do you do this? Well, it is a product that has been released by Manulife Bank, and they have pioneered this in Canada. Now, none of the big six banks are going to talk to you about this. As a matter of fact, if you ever go to them and question them about it, they'll say, oh, we can do that. And yet they can't, because even their own representatives don't often understand that their product is not the same as the ManuBank product. So how it works is essentially this. The secret to the program is simple interest daily. So if you go into your bank and you take a check for $1,000 and you put that down against your mortgage, they have already bundled your interest by compounding your interest semi-annually. And it's going to make little effect on paying your mortgage off faster if you do that. Where if you do that with a product that we're going to talk about, it's amazing, because the secret is the interest is calculated simple interest daily. So that means the moment that you put $1 in your bank account, you are no longer paying interest on $1 of debt. All right, here's simplistically how it works. Let's say your mortgage was $100,000, and I know you're thinking, well, man, I wish my mortgage was $100,000. I've seen a few of those that are almost paid off, almost ready to be gone, but most people have larger mortgages today. I think our average mortgage that we see in our client base is about $350,000, which is still low compared to new mortgages today. But let's say it was $100,000, and you put $10,000 in your bank account. The way that the ManuOne account is structured by Manulife Bank is that when that $10,000 go into your account, all of your debt, all of your savings, all of your checking is wrapped up into one single account. Therefore, when the $10,000 goes in, it immediately on that day drops your debt down to $90,000. Now, you're going to have expenses. You're going to buy some bread, some gas, some food, some eggs. I know we do at our house. You don't want to know what our food bill is with all our kids. But it's going to creep up through the month. And let's say, for easy math, at the end of the month, you had bought $5,000 worth of bread, eggs, milk, and gas. So you'd end the month with a total debt of $95,000. You have paid off $5,000 in 1 month against your debt. Then month number 2 rolls around, another $10,000 paycheck. And then again, you're going to buy some bread, milk, eggs, and gas. And that creeps up another $5,000, but you're going to go from what is now $85,000, because you put your $10,000 in. Now it's up to $90,000, and now you've paid off your debt $10,000 in 2 months. And it just keeps leapfrogging month after month. And the more disposable income you have in your household income against your debt, the faster you're going to pay off your mortgage. So this is the fastest way we've ever seen people pay their mortgages off. This is a golden rope that will pull you out of debt faster than any other banking instrument in Canada. Now, the reason I call it a golden rope, because it'll pull you out of debt faster, or you go hang yourself with it. And how do you do that? Well, you buy assets or investments, or what I call poof assets. So, depreciable asset. A poof asset actually is that holiday that you book to Tasmania, and once it's over, it's gone, and you've got nothing to show for it except a good memory. A depreciating asset is that car, that sports car, that as soon as you drive it off the lot, it's depreciated at least 20%. There is one major bank, Big Six Bank, that runs a commercial, and I won't mention them, but it just gets me every time I watch this commercial where they say, hey, borrow money against your home and you can go to Switzerland and have a great time in the Alps and dance and play and come home. The guy rolls up the garage door and there's a sports car sitting in there funded by the equity in his home. So the first asset was the poof asset, the holiday, and the second asset was the depreciating asset that he lost 20 cents on the dollar the moment he drove it off the lot. You don't want to invest in those kind of things. But what about putting a new kitchen in that enhances the value of your home? Apparently, one of the greatest areas that you could ever spend on upgrading the value of your home is landscaping. I was surprised to read that, but landscaping is that first impression of the home. So there are great ways to utilize the ManuOne system. Well, the first thing that I've talked about, obviously, is paying your mortgage off much faster. The second thing is how you can utilize a ManuOne to maintain your lifestyle. So we have clients that came to me and said, Dan, if it wasn't for the ManuOne, we would have lost our home. So here's a scenario where husband was injured in an industrial accident, and the surgeon that did the repairs botched up the surgery, and so there was further medical time needed for recovery, and then there was a WCB claim, industry accident, and the whole system, the whole journey took about 4 years where there was no income because it was wrapped up in the courts, and it was a terrible time for them. And they told me, had it not been for the ManuOne, because they could actually stop their interest payments where they had the opportunity to not make any deposits at all, they were able to live from the equity in their home and survive that time until he got a great job and they were able to start up paying again. But here's the real significance of what happened during that time. During that 4-year period, their house value doubled. And could you imagine if they had been forced to sell into a fire sale at that time before the prices rose? So it gives you that flexibility to determine what's best for you. Now, thirdly, I think of an example of one of our clients that worked at a very high level position, and they were changing jobs, and there were several opportunities that presented to them, but it wasn't exactly what they were looking for. And after 6 months, they explained to me that the ManuOne gave them the opportunity to take their time and wait upon that opportunity that came, that finally they could seize that opportunity and further their career in the job that they wanted. And they were very successful in it, and the ManuOne allowed them to do that. So what it becomes is like your private bank. It becomes your customized mortgage, if we call it a mortgage. It allows you to customize it to exactly how you want to use it. And there are other benefits as well. One of the benefits that we're seeing now for the future is that we have clients that have so much equity in their homes. Some homes are, running $1 million to $2 million of equity, and this becomes a great place to supplement retirement income. When you retire, you want to enjoy the things that you want to enjoy. You don't want to just exist, and we can actually supplement income from the home over a period of time. Think about this. The average rate of return on real estate over the last 50 years is 7%. It is not consistently 7%, but averaging over time 7%. So if that is true and remains true historically, why wouldn't it make sense that we could take 5% out of the home every year? It's going to grow by 7%, and the 2% is that margin that we like to have for inflation. And you could take 10, 20 years of retirement income to supplement your income on $1 million home with $1 million of equity. that is $50,000 a year. So it becomes another source to transform real estate equity into cash flow that you can actually spend and enjoy during your retirement years. All right, so there we have some very important reasons why it makes sense to have a ManuOne. There's even a concept where we show people, one of the most important claims that I see is critical illness these days. The heart, stroke, cancer, heart surgery. We've had claims for paralysis. It includes blindness. There's 24 different categories of critical illness. If you get a critical illness, you're not going to be working. And we are able to insure our clients with critical illness claims. And if you don't have a claim during a 15-year period, we have programs where you get all your money back. So this is like, can you imagine having car insurance and driving for 15 years and you don't have an accident, you get all your money back? Well, that's exactly how this critical illness works. But here's an idea. Let's not pay from this critical illness using your cash flow. And by the way, if you're in the 40% tax bracket and you want to pay $1 of insurance premium, you have to earn $1.40. Why? Because you've got to pay taxes, you've got to pay CPP, you've got to pay all those deductions off your paycheck to leave you with $1 in your pocket. Well, using our concept, that doesn't happen. You use your ManuOne to pay for the insurance premium. And at the end of the day, all you've paid is the interest. So for an example, if your insurance premiums were $250 a month, and that's $3,000 a year, the interest at 5% is $150. And you're going to get all of your principal back in the 15th year. Now, if you don't get it back, it means that you've got a get well card and a claim paid out for $100,000 or $200,000, depending on what you insure for. So there are many, many ways that you can use a ManuOne to set up your finances to work much smarter, much more efficiently. And we're excited to share these concepts with you. Just contact us, and we want to be able to help you transform your life with excellent financial ideas and concepts that will make a difference in your life. So thanks for listening today, and we look forward to our next podcast where we will share more ideas with you.